Hey, Anthony. We're here today and we're talking about IRS Medic.
That's right.
We're talking a little bit about the history of IRS Medic and how you came to sort of be an international powerhouse based in little old Wallingford, Connecticut.
Yeah, it's kind of interesting.
It's awesome to come into work in Wallingford, Connecticut, where we grew up, and see people flying in from literally all over the world.
All over, some big cases all over the world.
Yeah.
And it's just amazing that this has happened. It's attracted just some fantastic clients from around the world. And now that my dad's retired or semi-retired, his job is now to pick up clients at Bradley Airport. Mm-hmm. And he has his Lincoln Continental or actually Lincoln Town Car. Oh, they don't make it anymore. Mm-hmm. And he loves doing that. So it's a lot of fun.
That's awesome. Yep. So you just decided to stay in Wallingford because that's what you knew.
Well, why did I need to go? I mean, with technology and everything, there really isn't much need to go anywhere else. And I don't like traffic, I suppose. And I do live 3/4 of a mile away from the office.
Yep.
So I guess it works out.
So what we deal with here is a lot of federal tax problems.
Right. Yep.
But I think the benefit of being based here is Connecticut has a lot of its own tax issues.
Oh, boy, yeah.
And I think just being really familiar with those, what a great tool for you all to have.
Yeah, and it's actually, a lot of it, the practice comes from a lot of the success of our firm comes from that my dad and I started this firm in 2004, and my dad was, 62, I think, mm-hmm. 62 or 63. And so before that, he was a lifelong government employee. And that background, he managed many state agencies and he was in management. So that background helped out so much here as now we're on the other side trying to deal with the people.
So you have a general idea of some of the inner workings.
Right. And my dad
That's cool.
and my dad is somebody who never, he's like, you are not allowed to get mad, angry at a state employee or a government employee. You treat them with respect because he was one. Mm-hmm. And you know what? That really pays off because it doesn't do you any good. You want to push around a state employee, it's going to come back. This is the thing. They have the power. They have the control. And, just lashing out against them doesn't really have any strategic benefit at all.
Yeah, we've said the same thing about dealing with IRS revenue agents. So let's talk about some of the unique things to Connecticut,
okay.
The big one being the income tax.
Yeah, right. This was an interesting one. Now, I think I don't know where I was in 1991, but I remember this when it passed. Lowell Weicker, that fantastic Republican governor, he really sold us out, horribly so. Here's the panic. I mean, they were really good at selling this panic, like this uncontrollable panic, like the state is going to shut down and, things are going to fall out of the sky, that there was a $1 billion deficit back in 1991. And this was a crisis of, oh, my God, this was the biggest news. Like, what are we going to do about this budget deficit? And a lot of it was caused by a downturn in the economy. Just sales tax were down. It's like, well, you could just wait, just do that, just wait. Mm-hmm. Or you could do what Lowell Weicker did. You could just lie and say, well, we have to pass this temporary measure. It was sold as a temporary measure just until the budget deficit is paid off, mm-hmm. which I guess is that's honest because now the budget deficit is at over $3.6 billion, probably like $4 billion. Right. So the thing that was supposed to reduce the budget deficit, as far as I can tell, has increased it, mm-hmm. which makes sense because basically state spending has gone up. The state of Connecticut is one of the easiest states in the world to get any sort of benefit. Unemployment. There is a friend of mine has a manufacturing concern, and they do some high-end hardware for furniture. Really great stuff he does. He said that an employee showed up at the factory, mm-hmm. drunk, started a fight with another employee, mm-hmm. and the police were called. Employee left, and the employee then was fired, and then the employee made a claim for unemployment. Hmm. And you know what I'm going to say? Mm-hmm. The Connecticut Department of Labor granted the person who showed up drunk and started a fight unemployment.
Wow. And,
anyone who has a business knows this, like, you're going to get unemployment unless... there's a really big police report, I think, like, I guess, a theft, like maybe a big theft, mm-hmm. embezzlement, then probably not, but basically they give it to anybody. And, the businesses pay for that, and the tax, the budget deficit pays for that, I suppose.
Yep.
And also, if you ever look around Hartford, man, I did an internship at the Legislative Office Building in 1996 or 95, and I noticed I noticed, like, well, we were trying to close a budget deficit, and this building was pretty much brand new. It was 2 years old at the time. And I said, this is one of the grandest buildings I've ever been in my life. I said, there's no way in hell they're ever going to close a budget deficit. Basically, they looked at the income taxes. Hey, we got more money to spend. Let's spend it on us. And that legislative office building right next to the Capitol in Hartford is absolutely gorgeous. And then the lunch there is got to be subsidized. This is 20 years ago. Oh my God. Whoa. But I imagine it's still subsidized. It was the best lunch in a cafeteria I ever had in my life. The soups they had, everything was so good, and it was like $4.
Yep.
It was amazing, and everything was beautiful. It's like, okay, so here's our income taxes we needed to pay the deficit. It's going here. And, the thing is that in Connecticut, if you raise taxes, if you've been part of every tax increase, everything that has put Connecticut in one of the worst economic situations of any state, you're reelected. I know my representative will probably run. There'll probably be some nominal Republican opposition that no Republican will actually, they're not going to really support, give any money to. She'll probably be reelected, and people love her because, well, she's good for the Quinnipiac River, even though the Quinnipiac River quality hasn't really increased. That's just the way it is. This state is just, I think there is a cultural stupidity that permeates everybody except those who are paying it. And the people who are paying it are the people who are running business, the people who are self-employed. Yeah, they're really the ones. And, we are such a minority. And no one believes us. No one believes us. Like, no, you have the money. You could just pay more. Just pay more. And you don't see the nonsense we have to hop through.
No, they have to pay both state income tax and sales tax and use tax.
Yeah, sales and use tax. Use tax is the tax you have to pay if you buy something out of state. Okay, so that's what I always. What is use tax? Do it? Use it?
Use it?
Yeah. Sales tax, and it's kind of funny because it's like, okay, well, I just have a question for the people out there, for all the good people out there who are just so wonderfully and pure, and they know everything good and right about the taxes and how the people, the rich need to pay taxes and businesses need to pay taxes. Why do you think it is the law that businesses need to collect sales taxes? Why don't taxpayers just fill out their own OS 114, the DRS sales and tax form, and send it in with their sales tax payment? Why don't they do it? Why does the retailer responsible for forwarding? Why doesn't the person who's actually responsible? Because it's actually the consumer is responsible for it. It's actually the retailers. It's not the retailer's money they're responsible for.
That's a good point.
They're holding it in trust. So why is that the case? And it's the same reason why employers are responsible.
Well, it's easier to track businesses than individual people.
Right.
Yeah.
And it's easier to put the squeeze on them. And the reason, but I guess, and I think, but why would it not be necessary to make it easier? And the answer is because the state knows you're dishonest. The state knows you won't send the money in. The state knows if you're an employee, you won't pay it in. If you're an employee, you're not going to send them money. They put the responsibility on somebody else because you're dishonest. Because let me tell you something. If the state made it, like if you only had to pay your sales tax, your use tax and your income tax at the end of the year, and you had to write a check, the state knows like it would get a little bit less, maybe like 20% of the total. And this is the whole thing they set up, right? And it's a great way to make someone else, the enemy and the bad guy. And it's also a little shell game they play because they're trying to make tax day a great refund day for the majority of people, which they're successful in. 80% of the people are like, oh yeah, I want to get my taxes filed.
Yeah.
I'm getting a refund. Oh, this is great. I can't wait. And then what about that 20%? They're the ones who are getting hammered, who their compliance fees cost more than whatever taxes you paid for the entire year.
Right. Now, what about some common tax issues that people may come across in Connecticut?
Some of the things some of the common tax issues is that if you have an IRS problem, you might be dealing with a local IRS office. Okay, and we basically have two different types. Well, I guess three. Don't get to the third. The first type is a field collections. Okay, field collections is where they house the revenue officers. Okay. We have field collections in New Haven, Bridgeport, Norwalk, Rocky Hill, or I'm not sure if it's Weathersfield, so on Celestine Highway, on a very ugly building. Hartford, which I don't know where it is, but sometimes it's somewhere hidden in Hartford. I haven't been to that one. When I think it's really small. Waterbury, which is lovely. And then there was one in New London. The revenue officer there has been sort of pared down. I'm not sure. I haven't had anything with him in a long time. That's where they are. Norwalk's a big one. Norwalk handles a lot of Fairfield County. That's what we do a lot of for resolution, sort of the higher end stuff. And New Haven and Rocky Hill. Waterbury, not so much. Even though Waterbury's been slower, so they've been taking stuff from Fairfield County.
Okay.
And when you have a revenue officer assigned, a few things. When a revenue officer is assigned to you, they have to make first contact, okay? They can't pick up the phone and call you. They have to meet you in person somewhere. So that might scare the crap out of you because they're going to show up your house, your business. And there was one revenue officer.
Unexpected, right?
Oh, yeah.
There's no appointments.
They're just going to show up, drop off their card. Okay, so if you come home and you see an IRS revenue officer card, they were there. Why don't you call them? Because there was one revenue officer who I was friends with said that he tracked a woman down at a Rotary Club. Because she wouldn't respond. So like, I'll find you. Okay. So yeah, you're going to want to respond to that.
Freedom of Information Act at its best.
So that is, when a revenue officer is assigned, usually, it's going to be a higher level income tax issue, or it could be payroll, and it's going to be pretty serious. Connecticut has not had a lot of new revenue officer hires. Still a lot of the guys who are hired in 2009, I'd still consider the new guys.
Yep.
But there is a new budget coming, so we might start seeing some new ones. It used to be, we were far busier with revenue officers years ago, but so many of them retired. We might be half the revenue officers we were in 2009, really.
Yep.
And that has taken an impact on the collection activity.
Well, there's a 30-day collection notice, correct?
Well, that's with the state of Connecticut.
Okay.
So that's completely separate. And just briefly before we get to that, I would just want to talk about revenue agents.
Yep.
Those are your field exam, your auditors. Most people don't know. Most audits are conducted by mail. The vast majority of audits conducted by mail. This person on the other end, they might be in Memphis, okay? They're just going to want documentations to support something. When you have a field auditor come to you, that means your case is probably a little bit more serious. And that's really something, to put that in perspective. The IRS thinks this is so important that they're going to put, that one of their, they have very few people. They'll put them on that. Now, the 30-day collection notice is something that comes from the Connecticut Department of Revenue Services.
Okay.
Okay, and the 30-day collection notice, this is sort of the difference, and this is the way to kind of think about the IRS versus Connecticut and Department of Revenue Services, along with pretty much every other state, okay, because they're all sort of in the same bind. The federal government really doesn't need to collect revenue, really doesn't, because they're always going to get more money. Oh, the debt limit was increased. They go through this whole thing. We're not going to increase the debt limit. Yes, we will. Then they do. They always do. So does the federal government really need to collect revenue when it basically has a piggy bank it can go just get more money from any time? So the IRS is always going to be more lenient in collections than a state who
that makes sense.
Has no, they don't have a mint. They're like, let's go get money. Yeah, collect it or borrow it. Well, Connecticut, your credit sucks, so I don't know how much we're going to let you borrow because I don't know how you're going to pay this back. Because one of the reasons why, Connecticut, I don't know what's going to happen here because the Yankee Institute did a report on the state's unfunded pension liability, which is a concern to my dad because he has he does have a pension from the state of Connecticut.
Yep.
He also has a pension from the city of New Haven. He says the city of New Haven, he's not worried about it at all. He goes, that's in great shape. He goes, it's the Connecticut one, which it really, really is terrible. It is the Yankee Institute says it's unfunded by something about $24 billion. That their assets they have access to is like $24 billion, but their long-term obligations something like $46 billion. And to put that in perspective, the current deficit that is giving Connecticut one of the crappiest ratings of all time is $3.6 billion. So you throw that $24 billion in there. Something's going to happen. The state employees are going to take a haircut. That's basically it. Something's got to happen. There's no possible way. You can impose 100% tax. You're still not going to get it. you're not going to get $24 billion anyway.
No.
It's just, no. It's
impossible.
It's impossible in every way. And that's something and I think that's something that went into GE just left the state. And I think that's something they looked at, that Connecticut passed, Malloy again raised taxes. And there's not enough. You can raise taxes as much as you want. You're still not going to get the money. It doesn't work like that. Raising taxes doesn't give you money. When you raise taxes, you get less of the thing that you're taxing. If you tax income, you're going to get less income than your taxes. So it's not a static thing. Well, if I just go up by 10%, I'll get 10% more revenue. No, if you go up by 10%, maybe you get 1%. If you go up by 20%, maybe you get negative 20%. That's the way it is. And it's the most obvious thing in the world that every politician in the world ignores, that it's a dynamic system. And people respond to the tax code like you wouldn't believe. And it's all one of these things that everyone's kept in the dark about. That's so obvious when you are working for yourself or making a decent income. You know what you're going to do. You're like, I'm going to get out of Connecticut. People leaving. And the tax base reducing, and you're on the wrong thing. Our tax base is shrinking because of high taxes. Let's raise taxes. Okay, you're only accelerating the problem. So that is one thing, that we are in a pretty tough climate here. Oh boy, I worked myself up here. Let me just calm down. It's a beautiful state.
It is.
And the Connecticut River is just one of the jewels. We love relaxing down there on a hot summer's day. There's nothing can't be beat.
All right. So what the point there was, the IRS, they don't need to collect revenue, so they're not going to come after you as hard.
Yeah.
Connecticut, even the statute of limitations is different.
There you go, right. Yeah, the IRS has a 10-year statute of limitations to collect on the date of assessment. So if you don't file, the clock isn't running, okay? And there's other things that could stop that, all right? Being out of the country actually stops it. Now, with the state of Connecticut, there is no statute of limitations on assessment, and which can lead to some interesting negotiations with the IRS, or with the DRS. We're trying to, someone's dead broke and they owe so much money they're never going to pay. We'll say, well, look, he'll borrow some, $10,000 to pay this off. Come on, what's the deal? No, we don't want it. Okay, but this is really about all you're going to get. I mean, you could see that. Well, your client could win the lottery.
Oh.
If lottery is your key to success somewhere, right? I mean, really, that's what you're dealing with. And
Wow.
So Connecticut doesn't feel the pressure to settle taxes the way the IRS does. The IRS says, yeah, we have a limited amount of time. Let's prioritize. We'll go after this. Okay, it looks like you have this. We'll get rid of this. Now, usually your state your state income tax isn't going to be as high as your federal. But when it comes to sales and use, oh man, that can get out of control, especially where you're dealing with, employee theft or something that goes wrong in your business with it, which, something you thought was insured, which doesn't, your cash is depleted, or an audit that was complete BS that you didn't know how to contest correctly.
Yes, and they will actually suspend your sales and use tax.
Yeah, they'll suspend it so that somehow you're supposed to be able to repay them when you're out of business.
Yeah.
That's pretty good logic. And the other thing too is that with the sales and use, right? They really, they want that money. They want that money so bad, they will arrest you. Okay?
Wow.
Yeah. It happens a lot. It's, the chances of getting arrested for income tax evasion in the state of Connecticut are far less than getting arrested for failure to pay sales and use tax.
Yep.
And it's, really, they don't want you in prison. They just want you to, to force you to come up with some money somehow, ask a rich uncle, whatever the case is. Now, the problem is that a lot of times, especially in audit, these are not numbers you owe. You actually don't owe it, and people will agree because now the criminal charges and they're just scared. And then most of the criminal attorneys up there, they're criminal because I've been up there. I go up there, and it's kind of funny because I'm the one tax attorney. I used to do criminal law stuff years ago. I'm the one tax attorney, and the rest of them are all criminal attorneys. And so they're, hey, before this they were just doing, domestic violence one, and it's all just negotiating. All right, well, this back and forth, this back and forth. I show up, I'm like, no, your numbers are all crap. And then, oh, no, we don't do that here. I'm like, no, these numbers aren't any good. We'll pay what's owed, but we won't pay a cent more. No,
dude.
No.
Take it easy, man.
Hey, what do you do? Whoa, you want to go to the numbers? Geez, man. Come on, just give us something. I'm like, we'll give you what you're owed. And so that's one thing that's a little different. They're really just pressuring you to get money. Maybe you do owe it, and that's usually what happens. You'll get a deferred prosecution. If you pay something, as long as you go along with the deal, they will give you a nollie, or maybe they'll make you burn your auxiliary rehabilitation. Just they want the money. And
Right.
don't do it again. So that's what it comes up with. But, it's really not a lot of fun, because I'll tell you, when you're in the Hartford courthouse and you're representing a tax client, your tax client looks different than everybody else there. I mean, you're really dealing with criminals.
Yeah. So when you're talking about a local level, now obviously I think we're unique in that we can deal with international clients, where the pros at offshore issues, FATCA, FBARs, things like that. But when you're talking about a local sales tax issue that you're having, it's worth using a local guy because they're familiar with that state's laws. You see so many ads these days about, tax debt help and tax resolution companies. But if you live in Connecticut, you don't necessarily want to call somebody in Denver.
Yeah, they're not going to know.
help.
There's certain states right now we've been doing a lot of stuff with. We're pretty good with.
Yep.
Connecticut is the one we do happen to know the best. And sometimes there is an issue where it's like, you know what, we really don't want to do this. Here's, we found somebody who's really, this is their neck of the woods. It's really up their alley. Why don't you go with them? California is one state that we're really successful with. They actually are a little bit probably the best. The California Franchise Tax Board is really one of the best organizations, and I think it's because they're bigger. They have a far more structure in place, far more appeals, and I think they just happen to be cooler. They definitely aren't so uptight like they are in Connecticut.
That California commercial on TV was right.
Yeah, it is. It is sort of that way. They are a little bit warmer and fuzzier in California. And New York is easier to deal with than Connecticut. It really is. It's a little bit, there's a bunch of different departments up in Albany, but they're a little bit more predictable, I would say. Even we did get a funny letter today from them saying that we requested some information on a client, and they were like, well, for that information, go to the IRS for your account transcripts. And I was like, well, I don't think you knew what we were asking for. We know that. So yeah, New York is, a little bit better. And I think New York just did get a statute of limitations, and that's something that did happen there. So that helps out a lot. Some states do have a statute of limitations on this, and Connecticut is one that doesn't. And there's a huge, that's just huge, because people can run up these massive debts that they're never going to pay. And you can see it. They're just worn down. It's like, well, what am I going to do? I could work the rest of my life. I will never be able to pay this off. The state is never going to get it. And it's like, don't you just want to clean up your books? Get this off, and just so it's not bothering anybody.
Yep. But when it comes to the state of Connecticut, we're good in that we know how the state agency operates, all the different revenue officers, we know how to deal with them. So I think there's definitely a benefit, when choosing a local guy as well.
Yeah, and I think that, this state can be dealt with, and it's important to understand how it is different, though. The DRS is a small state agency, okay? It's not the large IRS sort of thing. This is something I learned from my dad. My dad says, look, when I worked at all these agencies, you'd have people who were incredibly talented. And you're like, why are you working here? You'd be like, you're so good. Why are you here? You're too smart for this place. You're too awesome. Okay. Right next to that person is the worst employee on earth. Okay.
Yep.
Both of them get paid exactly the same. Both of them are exactly on the same promotion. The whole thing, everything's the same. What happens is the incompetent person is great at getting work off their desk by just sort of getting it off their desk by not doing it. The competent person is usually doing the work. So what you're trying to do is, when you're dealing with that incompetent person, there's probably somebody who's really good who will do their work for them. So you got to feel out like, well, okay, all right, I don't want to deal with them. Who's in the same office? And you wish you had a map. You wish you had a map of where the offices was. So you try to figure out, you call around to try to figure out who is the star, and get it to the star, because the star lives in reality. The star knows how to make a deal, something that's good for everybody, and that's what you try to do. That's what you really need to do with the state, because I could tell you could call the state and call 10 different people, get 10 different answers that are polar opposites. So that's sort of one thing you want to do, is just find the right people to talk to and the people to avoid.
And we've said this again and again. Same thing with the IRS.
Well, the IRS, you don't have a choice.
Yeah.
If a revenue officer is assigned to you, that's it. You have now, but with the IRS, you have a whole appeal level, so that you don't have to deal with them. DRS, you have one person who is probably assigned, but there might be someone parallel that could also help you out if you know how to sort of help them. Like they're going to do you a favor, so make sure you do them a favor by having everything really organized, hyper organized. Like, see, this is a really good deal. See, we have this, and it's like, yeah, I'm looking at this. Yeah, I don't mind signing off. Sure, I'll get to it.
So what's some of the common problems that sort of go hand in hand with the IRS and the DRS?
Okay, so the IRS has a 10-year statute of limitations to collect. DRS has nothing, right? So when we're trying to come up with some sort of settlement, we have to pay back both the IRS and DRS. We kind of want to accelerate that DRS payment and make sure that the money is going to DRS, because the IRS can be dealt with, and at least 10 years go by, it'll be gone. So really our focus is that DRS thing that is only going to go away with an application of money. That's really it, to go away good. Unless, and this is the thing that we've done, and the IRS has offer in compromises, DRS has offer of compromise. And there's different standards. And this is what's sort of frustrating, is somebody could come in and say, I owe this to the state of Connecticut. Should I file an offer in compromise? Well, do you want to? Because the answer is, I don't know. You could have one certain facts this way. Yep, approved. One, we never take offer of compromise. We never would accept this. It's like, well, I just had this one accepted. And I'm like, okay, who are you? I'm like, all right.
Let me try somebody else.
Yeah, let me try something. And you try somebody else. So but sometimes you can get frustrated, that they'll just say, no, we want it. The money's there. That's something to be aware of. So if you do have, that's one of the things, and usually it's a lower amount when someone owes income taxes. So it's like, hey, you know what? You just get in a payment agreement for this, get rid of it. But now when we're going to settle the IRS, we're going to make sure when we're looking at your allowable expenses, we're getting as much credit for what you're paying back to the state as possible. So you're paying less to the IRS. That's what you want to do, is you want to pay less to the IRS, more to the state, because the IRS will, again, they can print their own money.
Right.
And it will go away, whereas DRS, state cannot print its own money, and that debt is not going away.
So they'll come after you. Now, changes to your federal adjusted gross income will automatically increase your Connecticut income tax liability.
I should say pretty much guaranteed, but not. I can't say in every case, but this happens a lot. Somebody has the IRS issues a CP 2000, which is a notice to say, hey, we've noticed this. You didn't report this on your return. We're going to include this income. Let us know if you agree or disagree. If you don't respond, the change happens.
Yep.
And so what most people don't realize is that's also going to affect your state AGI.
Yep.
So your state taxes go up. And I had an interesting case that was, this was really, there was nothing we could really do about it. Overall, it was still a good deal. I had a client who came in, and he had an audit that raised his tax bill really high. And I said, all right, well, what do you want to do here? You want to do an offer on this? He goes, yeah, I think I should do an offer on this. I said, okay, let's settle it for it. But we take $200,000 down to $5,000. And so we closed out the case. We're all we're all giving the thumbs up. Then he comes up like, well, hey, wait, Anthony, I got these notices from the state. Like, I owe him $15,000. And it was years after the offer and compromise was accepted, paid. And I was like, what? I'm like, what? No, let me see the notices. And then I'm like, oh my God, I know what happened here. He was audited, but he didn't know he was audited. So they just increased his tax liability on him without telling him. And so he actually had a ground for audit reconsideration. But after we did the offer and compromise, we couldn't do an audit reconsideration because there was no liability. So there's nothing for us to do. So now, but as far as the DRS is concerned, is like, well, that liability is correct. Well, is there any way for us to challenge the DRS liability based on the increase in federal AGI? No. So then he was stuck with $15,000. The thing is there's nothing, because he would have ended up with an audit reconsideration that would have lowered it. It would still have been too much where he's paying the $5,000 that we offered anyway.
Yep.
It was just more like, that's a crappy surprise.
Yep.
And unfortunately, it should have been half of that. And the state doesn't offer any way to challenge that assessment after that 30-day notice is done. That's basically it. The state's like, screw it, you owe us the money. It's going to stick around forever. Oh, you want a rights to contest this? Yeah, I'm sure you do. And that's one of the huge differences. The IRS, there's always some other bite at the apple. There's always some avenue. In most cases, just some avenue. Look, if you really don't owe the money, there's got to be some way to show them. Right. And they'll say, okay, we see you really don't owe the money. The state, we sent you the notice. That's all that's required. Yeah, but do I have a right to appeal?
It's been 32 days.
I don't know. The
so-
Supreme Court's open. I guess you could try them.
Yeah. All right. So changes to your sales and use returns may trigger a tax audit with the IRS as well.
Yes, this happens because if your sales tax goes up, because if DRS comes and says, oh, you have all this unreported sales, then they're going to assume that you have unreported income. Then they'll just say, oh, we had fun with you. Now the IRS can have fun with you. So that is something that can happen too. So
Okay.
it's good that, it's important. I mean, the thing with the DRS is you got to understand, IRS or DRS, you shouldn't mess around. With the DRS, look, once you ignore something, that's it. It's really hard, if not impossible, to get a fair hearing. And now you're left to, playing the massaging the system, getting a result you want by, finding somebody reasonable.
And they will throw you under the bus. They'll refer you to the IRS as what they think is any criminal activity.
Yep.
Good luck.
Yeah.
All right. So Connecticut state tax negotiations are different than IRS federal tax negotiations.
And it comes down to that 10-year statute of limitations, really.
Got it.
And then there's some things that DRS will allow, the IRS won't, vice versa.
All right. So there's a lot to know about the differences between the Connecticut state laws and federal state laws, how they sort of work together and also against each other. But definitely worth getting a tax attorney in Connecticut to help you with your problems, since we're familiar with all those laws.
That's
Awesome.
right.
Well, thanks for all the information.
Okay.
IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.